It's 2025, a new year and the best time to turn your great idea into a business. Shopify is how you're going to make it happen. Let me tell you how. Shopify makes it simple to create your brand, open for business, and get your first sale. Get your store up and running easily with thousands of customizable templates. All you need to do is drag and drop. Their powerful social media tools let you connect all your channels and create shoppable posts. Established in 2025. Has a nice ring to it, doesn't it? Sign up for your $1 per month trial period at shopify.com/promo. All lowercase. Go to shopify.com/promo to start selling with Shopify today. Shopify.com/promo.
Quiet Riot. Welcome to Quiet Riot. My name is Andreou. I have spent the last few days trying to understand precisely what is going on with markets right now. Why are they so jittery? Why are they so volatile? There are a lot of moving parts, a lot of blame to spread around, and a lot of agendas. And frankly, the coverage of it has been superficial, sensationalistic, and on occasion economically illiterate, even to me a relative economic illiterate. With some notable exceptions, the FT, Faisal Islam, to give a couple of examples. The problem, in all honesty, is format. 5 minutes here with a political editor who does not understand what is going on himself. 10 minutes with a minister pushing an agenda up a hill. 10 minutes with an opposition MP farcically over the top trying to push their agenda. And finally, if we get to it, at the end of the hour, 5 minutes with someone who actually knows what they're talking about, trying to explain what is going on in response usually to terrible questions. It's inadequate. And with such a fast-moving situation, it is de facto confined to the latest developments each time, rather than the underlying reasons. So I thought, what if you put all the time together and gave it to the actual expert, a real chance to understand? I spoke to Vicky Pryce, Chief Economic Advisor at Centre for Economic and Business Research, visiting professor at King's College, and former joint head of the UK Government Economic Service. We chatted on Thursday night, and I edited this overnight so you can have it first thing. Now, some of it is chewy and technical, and you may need to pause and rewind and Google the odd term, but I promise you, you will end this 30 minutes quite a bit more clued up than you started it, just as I did. Quiet Riot. Hi, Vicky. Thank you for joining us.
Not at all. Thanks very much for having me on the programme.
Can we start with as simple as you can make it, explanation of exactly what is happening?
A simple explanation. I mean, there are loads of things going on. Gosh.
I know there's loads of moving parts, but I guess a very simple way of expressing what is it that the markets seem to be bothered by, and how are they reacting, basically?
Yes, no, indeed. I mean, the interesting thing is that it's not just a UK phenomenon, and I think it's worth emphasizing that things are happening in the US, or have been happening in the US, and the reason has been that the markets have re-evaluated, if you like, have recalculated what the inflation picture looks like in the US in particular. And through that, of course, what it means for everyone else. And the reason why they looked at the US more carefully is, A, because the economy, surprisingly, just in the last few days, put out some data which suggested a stronger economy than anyone expected. Mm-hmm. Second, the impact of the tariffs that President-elect Trump has intimated he's going to impose on everyone, which of course means anything that comes in from the outside will become more expensive, which therefore means that inputs into the economy will increase in price. And of course, they will have to be passed on. And that, of course, adds to inflation. So interest rates in the US, therefore, are expected to come down a bit more slowly. If you look at the rest of the world, particularly in the UK, of course, we've seen inflation go up a little bit here too. And that is worrying the markets. There have been similar reevaluations of what inflation here will do. We've had a budget that adds costs to businesses, which are going to be passed on. Altogether, therefore, the markets have now decided that interest rates, or the assumptions they had made on interest rates, were too low. They've pushed them up, and they also think that the government will need, because of slower growth, to borrow more, and they'll have to pay a bigger, higher interest rate in order to get the markets to lend it to them.
It's a self-fulfilling prophecy, because if interest rates go up, it does mean that it costs more to service the debt, and it does mean the government will then have to borrow more. So you can get into a bit of a spiral, basically.
You can, and of course, the interesting thing is that it's happened already. So when you look at how much the servicing of debt costs to the UK government right now, when you just look at even 22, 23, just going back to, before interest rates started coming down again. I mean, the cost now, of course, have been going up again, higher than they were then. But the cost of servicing the debt as a percentage of GDP had gone up from something like 1.4% pre-pandemic, so we're talking about 2019, to 3.8% of GDP in 22-23. That's a huge change. And that, of course, eats up quite a lot of government borrowing, really. So if you have to borrow in order to pay the interest on your debt, because, of course, we're not in a surplus situation. So there is a deficit year after year. We have to borrow more and more and more. And if one bit of the cost that you have to borrow for goes up, then quite considerably, then you've got yourself in a situation where perhaps your debt begins to look a bit unsustainable.
Vicky, can I ask you something? It might be a really stupid question, but I've heard a lot of people disagreeing about this today. What is the difference between orderly and disorderly? Because a lot of the commentators are saying that some of the coverage is behaving as if this is disorderly, but really it was just a disorderly moment, but markets are quite orderly.
Markets behave like markets. So from that point of view, yes, they're orderly. They sell when they think that they should do, sometimes taking advantage, of course, of what they might do next. They take profit out, they speculate, all sorts of things like that. And of course, that influences the way that the market moves, the yield curve, as they call it, between short-term and long-term lending. So rates can vary quite significantly, and it could turn upside down at times. It reflects up to a point what the market thinks, but also how your time preference moves. So whether the yield curve is inverted, as I say, so you actually get the interest rate in later years being such that it suggests that there's going to be a real slowdown in the economy. Or it goes up quite significantly because suddenly they think that even in the longer term, there are going to be inflation problems. Because normally, if you look at the curve, it goes up a little bit, up to 10 years, and starts coming down again. That is 10-year bonds. So if you're lending to a government up to that point, generally what you have is the interest rate going up a little bit up to 10 years and then starting to come down again, because obviously you're assuming that there's some normality that returns for the longer term. Well, this time what we've seen is that suddenly it's the increase has been highest in the 30-year yields than has been in other parts of the curve. Although, frankly, if you look at where we are with the 10-year yield, the one that is used, this is the long-term bond yield, or rather interest rate, which is used to a very significant extent by mortgage providers to calculate what mortgage they will charge you. That's gone up by 1 percentage point over the last year, as has the 30-year yield. And the reason why everyone is focusing on the 30-year one suddenly is because the US does. The US has been talking about that non-stop in the last few days, because that's gone up as well, and their mortgage rates are going up. That's because people there borrow for much longer than is the case here.
That's so interesting. I cannot remember another time, Vicky, when I saw so many people interested in the 30-year yields. I mean, it's always been the 10-year, because that's the one that mortgages tend to track. Can I ask you something else? I am seeing a lot of basic confusion between this has implications for the budget, which of course it does, it absolutely does, and the budget caused all of this. Did it?
Well, up to a point, you could point the finger, if you like, at the budget, because what Rachel Reeves has done is increased borrowing quite significantly above what was in the Conservative government's last budget, which was in March 2024.
Yeah.
So on the new figures, you have borrowing an extra 30 billion a year over the next 5 years.
Mm-hmm.
So there is rather a lot. And that is in order to support some spending, extra spending that Rachel Reeves wants to do and the government wants to do. And it goes as follows. The extra spending on the NHS and also part of it also on capital spending, which is good news for the economy, if there is a bit more of that, is something like 70 billion extra a year than what was in the March 2024 budget. And the way that they are covering it is through taxes of 40 billion a year and borrowing of 30 billion a year. That adds up, if you like, to your 70 billion that I mentioned. These are all extra. So that is a very significant extra borrowing, which the markets have to digest. If the economy is doing well and growing, then perhaps even your revenues are going to be considerably better than what you have assumed. Usually you have a bit of a conservative estimate there. If the economy is not, and unfortunately the budget measures suggest that perhaps the economy will do worse than had been anticipated originally, or perhaps certainly not do better than even without that extra borrowing it was going to do back on the assumptions of March 24, then you've got a real problem. Retail figures haven't been that great. They always improve a little bit around Christmas and in the sales period, but they've been a lot lower than the retailers had been hoping for. So, in fact, the retail sector is not doing particularly well. It is true that there are some firms such as M&S, for example, and a lot of the supermarkets that are doing well. But if you look at the rest of the retail sector, it's not. And has been seeing job cuts and closures, left, right, and centre, actually, hitting particularly the smaller organisations, smaller firms, smaller companies in the sector. So what you can't square is the fact that actually the consumer has quite a lot, and the households have quite a lot of savings. They've still kept the savings that they made during COVID, and they're not spending it. But of course, one of the reasons they're not is because they're getting quite high interest rates now by just keeping the money in the bank.
And confidence is low. So
confidence is low because they're worried about unemployment. Because basically, what the firms might do now that they have to pay these extra national insurance contributions on the people they employ, they may well not want to hire in the future. And what we've seen already is a very sharp decline, according to some surveys, in jobs, which is a real issue for them. So everyone is being very sort of cautious about what they want to spend and keeping it just to be on the safe side.
I want to ask you if you think the Bank of England is slightly overreacting or slightly overreacted to that small rise in inflation we saw. Actually, are central banks in general overreacting because we've just come out of a period of very high inflation?
Yes, and I think they've missed a trick. It's interesting that the European Central Bank is now cutting more aggressively than the others, and this may well cut again at the end of January. The US Fed in particular and the Bank of England have been quite hawkish. They had a big opportunity to cut rates further during the second half of 24, and simply because inflation was still hovering, sometimes below, sometimes slightly above the target of 2%. Certainly in the UK, we had a couple of months of below target inflation rate. The confidence of the central banks had been hit quite badly when they were perceived to have reacted too slowly when they were moving rates up, and they've been a little bit careful about moving rates down. And now that inflation is beginning to go up again, but again, well within the band you'd expect around the target, it's too late. And in fact, I've written quite a bit about this, saying, that was the opportunity. So when are you going to be able to cut rates now? I mean, food prices are beginning to go up or have gone up in the second half of 24. Wages, there are shortages in various places. So some of them going up in some countries. But at least the European Central Bank, well aware that what's happened last time during the Eurozone crisis, which was that they fell into deflation, and then real problems with the economy they weren't able to get out of for ages until Mario Draghi, who was head of the European Central Bank, did the right things and cut rates to negative. that's how they managed to get out of it. And there is a serious issue that right now, when in most countries there's fiscal retrenchment taking place, what we're finding is that with tight monetary policy too, you're almost, stuck with low growth.
Yeah, you're kind of creating a stagflation environment.
Well, assuming, of course, you think that 2 to 3% inflation is serious
True.
issue, which it is.
Yeah.
So stagnation is more what I would call it.
Quiet Riot.
Hey, Atlanta. Say hello to Small Business Help from Apple. That's right. We're here to make starting and running your business simpler. From helping you choose the right devices to setting them up hassle-free, we can help you build your business in no time. Speak to a business expert and get the help you need at no cost whatsoever. At Apple, we're open for your small business. Go to apple.com/smallbusiness or visit an Apple store to learn more.
Burlington's Oh Wow Winter Clearance event is on right now. Throughout your store, you'll find tons of new markdowns just taken. Look for red clearance tags throughout the entire store for her, him, the kids, and your home. Score some serious savings at Burlington, up to 70% off other retailers' prices on clearance items. These deals on top of deals won't last long, so stop in today. Burlington. Deals, brands, wow. Prices and selections vary by location.
Quiet Riot.
Can I ask you a slightly political question? I know you hate those, but a lot of this is a confidence game in many ways. Is it responsible for the opposition to put down an urgent question, demand that the Chancellor cancel her trip to China, which seems to me pretty important for the economy? In times past, much of the same people in the same newspapers would be demanding everyone stop talking the country down. Does this political stuff not add to a sense of urgency?
Perhaps. I think there is some urgency. I think we need to think particularly what the Bank of England will do. And I think you asked me a question before and on it. And I think what needs to happen is probably what happened after Liz Truss mini budget, which was that the Bank of England intervened, stopped doing its quantitative tightening that it was going to do. It announced the day before the mini budget that it was going to start selling bonds in the market, and then had to intervene to calm the market down by not selling bonds, but buying them again. So we may need to do a bit more quantitative easing, but that needs to be done in coordination with the Treasury. And I think the Chancellor, if there is indeed a feeling of crisis, and she's far away in China, it's not just political, but I think it's economics. Something needs to be done to pacify the markets. Maybe the will get pacified just overnight, who knows? The mood might change for whatever reason. Maybe Trump would say, no, I'm not going to have any tariffs on anyone.
There are wage figures out tomorrow, I think, from the US. And
right.
Depending on whether those are stronger than expected or weaker than expected, I think we might see a reaction tomorrow being Friday as we record.
Yeah. We did see better jobs figures, and it's one of the things that has triggered this concern that there would be less scope for cutting interest rates. Everyone revised it to just 2 cuts in 2025, whereas there had been 4, I think, before, maybe 3 or 4. And indeed, the indication that perhaps the US economy is doing better, which means that general interest rates stay higher and inflation higher. And of course, this is affecting sterling because, yes, higher inflation here too, but not growing as fast. And therefore, there is a gap that will develop there. And that's why sterling is weak.
Still, as you know, as fellow Greeks, that scarring is very deep in our psyche. And I'm very aware that, markets flock around strength, but they also flock around weakness. And I guess the question in the back of my mind is there a danger that this begins to create an opportunity to bet against the UK economy or against sterling and create a little bit of a feeding frenzy, as we did see with economy after economy being picked off after the global financial crisis? Or do you think, as many analysts are saying, I will put a link in the notes actually to your superb article, and I will also put a link to a very good FT article. Most analysts seem to be saying basically the fundamentals have not changed. they're kind of priced in. This will bottom out in the next couple of days, and it would be a mistake to start reacting to every little movement. Where are you on that?
It's not little, it's quite significant. I mean, rates are now higher than they were after Liz Truss's mini budget. So that is a problem. If for whatever reason they get stuck there, then we've got a real problem, because it will mean that there will be a lot less growth in the economy. We were forecasting, by which I mean, most economists, growth of maybe somewhere between 1.5% and 2%, perhaps 1.7% is the sort of average that most economists were expecting, mainly because the government was going to be spending a bit more money, and they had already announced it. Not so much the private sector recovery, but certainly that. And that from then on, the private sector would start, recovering and investing alongside higher capital spending by the government. Nothing huge, but at least there would be some sort of growth, which would be certainly better than what we saw in 2023, where we had just 0.3% growth, and in 2024, where yes, perhaps just under 1%, and the second half stagnant. So that is where we were. But if interest rates stay high, then that scuppers even that relatively modest growth forecast that exists at present. And that's the real issue. Companies will not invest. The government itself will find that the cost of servicing the debt means that its fiscal position gets worse. There's going to be a review, if you like, of where we are fiscally by the Office of Budget Responsibility in March. So we see what they say. Of course, things may indeed, as you suggest, calm down by then, but the danger will always be there. And there is no doubt that the UK has no real reason to think that its underlying growth will improve. Productivity is still quite low. So it is a concern that if this situation doesn't get back down to normal quickly, it will have repercussions across. And just one of the simple things that you can see almost straight away is that if interest rates stay so high, mortgages stay higher than people have been anticipating. Where is the demand going to come from? Although there is some excess demand, of course, but who's going to be able to afford the new houses that will be built, supposedly? What will happen to the housing targets? A lot of what we expected in terms of growth in the future was down to houses being built, construction doing well all across the country because of all these targets that are out there. And of course, we do know that local areas do well when there is construction there because they use local materials, local people, etc., mostly except in London, where it used to be mostly European, or a lot of Europeans who used to be here. Now it's a different mix of people. But nevertheless, since Brexit, some of these things have changed. But if that doesn't happen, you may have targets, try and force the local authorities, and then, of course, they just lose a huge amount of money if those houses are just either not built or not sold.
I see completely what you're saying. It basically, all these things rely on a bit of a following wind and things developing in a favorable way. And everything at the moment seems to be developing in a slightly unfavorable way, or very unfavorable way in some cases. So it does look like a sort of intervention might be needed. Is there, do you think, a truss effect psychologically here that is paralyzing a little bit what needs to happen? Is the Bank of England thinking, I don't want to do that because it will make it look like the same thing is happening, and the government is thinking, we don't want to ask them to do that because it will look like the same thing is happening, and so we end up not doing the right thing because of how it will look politically?
Yes, that's really interesting, because if you look at what happened with the mini budget, apart from the fact that the Bank of England had to reverse what it was just about to do, and arguably right now the fact that it's carrying on with quantitative tightening is a bit of a problem and is affecting the markets, but maybe they will intervene. But they had indeed to abandon that plan temporarily and buy bonds in the market, as I said earlier. But there was a lot more that was done. And there are people now saying that Rachel Reeves needs to reverse some of what she had in the budget. And a lot was reversed after the mini budget itself. Jeremy Hunt, when he took over, he reversed the cut in income tax. He announced that, in fact, corporation tax wasn't going to stay at 19%, was going to move up to 25%, changed and reversed the reduction in dividends tax, and so on. So there was quite a lot that he had to... Or in fact, most of the tax changes were reversed. And that, of course, pacified the markets. Now, the question will be, does Rachel Reeves need to do something about some of her spending commitments? Not so much the tax, but the spending ones. And that's why people are now beginning to worry about what it will mean for growth as well, because if that's what you do, and a lot of the growth expectations for the future were based on spending by the government, as I said, both current and capital spending, where is the growth going to come from? Unless, of course, interest rates come down very quickly, back to where they were, and then get cut back even further. But I'm just worried about the Bank of England, again, as you suggested earlier, not having the confidence to do the right thing.
Since I have you here and we are talking about Truss, what do you think of her cease and desist letter to Starmer demanding he stop saying her mini-budget was a disaster?
Well, the interesting thing is, just as we've just been discussing, that the reason why it wasn't a disaster is because a lot of what was in it was reversed so quickly.
She sacked the Chancellor,
yes.
Someone else was basically imposed on her.
Yes, but she also listened then, or he got the Office of Budget Responsibility involved once again, which they hadn't done before. And that was terrible because he had sent the wrong signals to the market. Now, of course, we have legislation that says we have to involve the OBR in a lot of our spending decisions, not just look at what we're spending and tell us what it will all mean, but actually get involved in the big decisions, which is really interesting. So at least that's there. So the fiscal rules are transparent and are there. On the other hand, they have tied themselves in knots because of them in some ways. It doesn't leave them very much room for maneuver. But the interesting thing is that she did do something good, and it mustn't be forgotten, which has led to actually some better performance of the economy. And what she did, which Rishi Sunak before her as Chancellor hadn't done after the energy crisis when Russia invaded Ukraine, is to put a cap on electricity prices. And that immediately adjusted inflation expectations downwards, eased the pressure on households, eased the pressure up to a point on business, even though they weren't necessarily covered in the same way. And that brought also inflation down over a period. If you remember, there were forecasts of 24% inflation as a result of that. Now, the peak was 11.1, whereas all the other European countries had already done it, and we just weren't doing anything. So we left people panicking. So I have to admit that that was the right thing for her to do, and at least she did it and had the confidence to do so immediately.
Thank you, Vicky. Thanks for chatting to us. I always enjoy how simple you can make complicated things.
Thank you.
Quiet Riot.
So there you have it. It's complicated. Quite a bit more complicated than a banner headline that reads, "The UK's economic woes." They love woes, banner editors. Plainly, much of it is not the current government's fault. Plainly, some of it is. Plainly, most of it is international and historic, but it is this government that is in the driver's seat now, and it is this government that needs to take action. And three things stand in its way so far as I can see. The political price of saying, this didn't pan out, we need to rethink it. The institutional muscle memory that makes inaction, paralysis even, a safer choice than action. And a media landscape that remembers the excitement of Partygate and the Truss mini-budget and, like a crack addict, always tries to engineer that same high. None of the three are insurmountable. We just need collectively to grow up a bit. If you got to the end of this, then you got great value. So do support us on ko-fi.com/Quiet Riot Pod. Thank you for listening and see you on Sunday.
Quiet Riot is an audio production by Cooler Heads with Naomi Smith, Alex Andreou and Kenny Campbell. Music by Mariana Sangeeta, artwork by Simona Canelu. Quiet Riot is a co-production with Sandstone Global.
Quiet Riot.
It's time to turn your daydream into your dream job. Wix gives you the power to turn your passion into a moneymaker with a website that fits your unique vision and drives you towards your goals. Let your ideas flow with AI tools that guide you, but give you full control and flexibility. Manage your business from one dashboard and keep it growing with built-in marketing features. Get everything you need to turn your part-time passion into a full-time business. Go to Wix.com.